Hi guys, this is a weekly review for the Nasdaq futures chart, and yes, the S&P 500. Okay, let's begin. Remember that last week I told you the importance or relevance of having these gaps in your chart. This is a new week opening gap on the regular trading hours chart. Practically it's the first opening range gap from Friday to Monday. You can see how price always refer to this specifically gap during the week. On the past video I uploaded here on the channel, I told you that I was expecting to take this low and come back here below to this specifically gap, and then come back higher, and look where we found resistance on Friday on this gap. This blue line between these two gaps is what ICT called the event horizon. Is a 50%, the distance, the 50% between two gaps, and it's important also when you are trading these gaps, because this is the once you reach or you are leaving this price level, you are going to refer to the next than this one. And well, okay, this on the right side here is the monthly candle on this chart, and I want you to notice something important. Is that on this chart, if we move on to the electronic trading hours monthly chart, we don't have here the volume imbalance. Do you see? This is a monthly chart from Nasdaq futures, and if we move on to the 7-hour chart and we use this indicator to plot the monthly candle, we can see how we have between these two monthly candles here and here a volume imbalance that is actually the first new week opening gap of the month. You see? This level, and look the wicks and how we respect exactly this price level. It's insane. So it's important to have this in your chart. Well, let's move on. Remember that I told you that I was not expecting to move to come back above this, because this is a balanced price range right here. Okay, and look, for example, now on ES, look the difference between these two candles, how we actually it's different. On Nasdaq we balanced this range here, and on ES we didn't, and look, we retrace to this specific new week opening gap, this Monday gap, and we just open, touch the low, the close of this candle, and move on to fill this gap right here. And after that we come back again and we are trading inside this range. these two on Thursday and Friday here. And I want you to notice also the now we had an SMT here. You can place vertical line here, and is this actually this swing? Do you see how this was taken on Nasdaq and on ES? We didn't take this low right here. So ideally we should move on to this range right here. Here to come back and rebalance this inefficiency right here. But let's see what Monday does on the weekly candle, and after that we can see we are going to keep respecting this, because we made a swing point actually on this daily candle on a significant key level, and we should if we are going to respect this, we are going to move here, and maybe around here we can retrace and keep moving higher. Or if we are going to continue move lower, we should respect this here, this level, this gap, and keep moving lower. But yes, this is not this video is not about weekly expectations. It's about a review of what happened during the week. So now let's move on to a 30-minute chart. And we have here now the weekly chart. The weekly candle, power of 3. I'm going to take this, and this was the opening from Friday to Monday. Look how we got higher, and we just open higher. We retraced to the 50%, the consequent encroachment of this Monday regular trading hours gap, and move higher to reprice this gap here from the previous week. That is where we balance this range. Look, the 50%. We close below this gap, this candle, making this change of state of delivery, and we use this little imbalance here, and then we gap lower below the Monday's gap, and we touch this Friday low and push lower. And then on Thursday we gap lower below this new week opening gap. We move lower here to induce more sells into the market, and then we take this little imbalance, this buy side liquidity here. Actually, I took this trade from here to this gap here. From here, it was a really good trade, like 300 points. Nasdaq is moving a lot on these previous weeks. Insane moves. So yes, and Friday we just gap. Look, this is very important. Look how we close on Thursday. We closed just after we retest this new week opening gap. We gap higher. We were accumulating at the 50% and push higher. Actually, this is an imbalance, and you have here two confluence for this day. This imbalance here, the 50% of the gap. So this is a very important price level for the day, and we could just push higher to this gap again. This is from previous week. And also I want you to notice these standard deviations that I told you to keep it more clean. If here these they are, but it's very, we have here from this gap 2 and 2.5 standard deviations projections from this regular trading hours gap. And also I want you to notice this that was open also, and this was the low of the week. 4 standard deviations paired with 2.5 standard deviations from this gap that is still open and acting as a breakaway gap. And after we reach this specific level during the 4-hour power of 3 candle formation here, we just come back here. But yes, now we can, I think that we are going to move, we should move higher, but now we are trading inside this range. This is a consolidation. So inside this little range, let's see what price does on Monday. I usually don't trade on Mondays. I like to wait for the first day of the week to have data to work on Tuesday, and looking for on Tuesday the daily structure of the lower time frame, like 15 minutes. I can see where we are relative to the previous day close and where is the liquidity resting from overnight positions, and where is the most obvious draw liquidity relative to where we are on that specific day. And that's how I trade. Basically, I frame my trades using this gap for intraday, this regular trading hours gap, and you can pair this gap with the standard deviations and also another gaps for confluence. For example, this we have 4 standard deviations and also the consequent encroachment of this gap, and this was exactly the low of the week. So this is actually insane precision in these charts. And on ES was a similar scenario, but we had an SMT here. Look how we take this high here, this buy side liquidity from this was Thursday, and we reprice exactly this gap. Look the bodies. We close below this opening price level here in this candle. This is a change of state of delivery, and now we retrace to the 50% of this gap and move aggressively to the sell side liquidity. and this is obvious. Look, this is a very strong confirmation. When you have this kind of levels and we don't touch the high time frame levels like these gaps, this is a clear sign that they are going to attack this. And look, we move aggressively. I don't have here my gap tool. Let's put it here. This is ES, and note 2.5 standard deviations from this gap on Monday, on Friday, the Friday to Monday's gap, and also just a little bit lower from this to sorry, it's this, and also 3.5 standard deviations. So around this and this range, we should expect a reaction, and look what the price did on these price levels. Just beautiful. And for example, here on Nasdaq we retraced to the 50%, and on ES we didn't, because we were using this Thursday gap as a support. Right here, we were accumulating in the upper quadrant of the regular trading hours gap and using this gap as a support to move higher. Okay, and we didn't reach this gap here, and on Nasdaq we did it. And look here, we were accumulating another 50% in here on the upper quadrant. You see? So with this, you can see how now ES is looking stronger. Why? Because if we compare how much which percentage of the gap is rebalanced, we have here the 75%, and we didn't even reach the 50% on this one. So on Friday, ES was better for longs, only using this gap confirmation that we were not trading just below this gap in Nasdaq here. Beautiful. And we are about to end the monthly candle formation because we are in the last days of the month. So many times the low of the month is formed during the first week of the monthly candle. You can backtest that. We aren't going to do that, but so if the next week, I think that we should monitor if we are respecting this range here and we start to moving higher, that this should be maybe the low of the month. And if we are going to move again to attack these buy stops, we are making the low of the month around this range right here, very close to this, my opinion. But if we are going to move lower, imagine the power of three candle formation. This is the opening. We move higher, we could retest these gaps and then keep pushing lower. This could be in a scenario also. So this is why it's important to frame your trades on the everyday narrative that you are, where is the daily profile pointing, and where is the liquidity, and which week of the month you are, and what day of the week you are trading. But this week was a really good week. This day was a little bit hard to trade because we gap aggressively and we moving to the sell side, but if you were patient, you could took one short around here. I took the one short here and this long here, and all that was basically my trades for the week only. It was a good week. But yes, so this is everything for this review. I will be making this review every week and sharing my thoughts, my annotations, and what I saw and everything for you, and this helps me to make this also as a journal for me. Okay, so stay safe.